Hi guys, Christian here. In today's video, we're going to talk about the housing and mortgage bubbles and what's going on currently in the state of economy. It's a follow-up video to my last one on when Peter Schiff talked about what's going on with the weak economy and when we can expect a real estate reset. This is a great article from CBS Market Watch. If you haven't had a chance to read it yet, it's a really good read about when homeowners are going to need to pay the piper. We're going to hear from two billionaires in today's video, Jim Chenos and Zell. Both of these gentlemen are extremely well educated when it comes to real estate. Zell has a great book called Am I Being Too Subtle? It explains how he made over $5 billion in 40 years of investing in real estate. Make sure to stay until the end of the video where we'll find out about the eviction market and why there's over 30 million people that are facing the possibility of eviction and losing their homes. So let's hop right in. The first interview is with Jim Chenos, and right after that we'll hear from Zell.
As you look around the world, what worries you most, at least in the short term? I think one of the things that stands out to me is the working from home phenomenon. Maybe it's because I'm in New York, but I see a lot of commercial real estate that is seemingly empty. Do you see risks in this, Jim?
So the commercial real estate is something I think that not enough people are paying attention to. And one of the reasons is that the banking system is not sending out warning signs as it did in previous cycles. And one of the reasons for that is in the CARES Act, that gap accounting, in effect, was suspended for banks for loans that have gone into what they now call deferral. So prior to that, if someone stopped paying the bank interest, it would go into non-performing and non-accrual. And now, if the loan is deemed impaired by COVID, banks can continue earning interest on those loans that aren't paying them interest. So, for example, there's one New York bank that is very heavily aggressively in commercial real estate in New York City. And over 20% of their loans were in deferral as of June 30. Now, in the old days, we would have said a bank with 20% non-performers is headed for the rocks. And this bank trades at a premium to book value and, in fact, reported earnings that would have been less than half of what they reported had they been non-accruing the loans that actually are not paying them interest.
Who's the bank, Jim?
Yeah, well, I'm not going to name the bank, but your viewers can do. It's a very aggressive New York City mid-sized bank, but there's a lot of banks like this that have 20%, 15% of their loan book currently is on so-called deferral, and so far the market hasn't gotten worried about it. But if you look at some of the big New York landlords, like Vornado or SL Green or some of the others, you'll see that the rents are dropping at over 20% a year, and the cash flow is dropping as much as 30% year over year. And that's just getting started, I suspect. Whatever you might think about work from home, I think the need for additional office space is probably nil in a lot of cities. And the question will just be how much absorption. I would also point out that right now, urban vacancies are at 14% in offices in the U.S. That's a number that normally we see at the peak, not at the beginning of a cycle. So, and then one more point, we looked at some FDIC data recently, and most banks, with the exception of the very largest, I should add, the giant banks do not have this risk, but a lot of mid-sized banks are at all-time record exposure to commercial real estate, higher than before the GFC and higher before the last commercial bust in the late 80s.
Wow.
And so there are some worrisome signs out there.
First up in the queue is billionaire Zell. His net worth is almost $5 billion, and it's a fortune he has made as the founder and chairman of the private investment firm Equity Group Investments, which really specializes in real estate. That's how he really kind of made all of his money, was in real estate. So we found this audio clip from about a month ago where Sam is talking about the hospitality business, the hotel business. And so give this a listen, and then we'll provide some comments afterwards.
To go from 70% occupancy to zero kind of gets your attention. And the answer is the hotels are going to slowly open. Occupancy is slowly going to increase. You know, one of the big issues that I have been focused on since the pandemic began and the shutdowns began, and that is everybody's talking about the costs of having your building closed down. Nobody is talking about the costs of reopening. And those are very significant. And even in the best hotels across the United States, they're going to open at 5%, and then they're going to go to 10, and they're going to go to 12. And so I think it's going to be a tough environment. I don't believe that this is going to end the quote unquote convention business or the use of hotels to make deals. I think it'll start with, I've heard a lot of people say, God, with the experience we're having right now, I don't know why we ever put anybody on the road. I would expect that as it starts, there will be reticence of people to go on the road, and they'll say, we'll just zoom it out. And that's what will happen until some young, aggressive guy gets on a plane, goes and gets the deal done while you're sitting on Zoom selling an idea. So I don't think we have any significant change. We had, again, just like office space, we had an oversupply in the hotel business already in place before the pandemic. And the result is there's going to be a significant number of hotels that are not going to reopen. I would bet that they would have not reopened except maybe a year or two later than what's going to happen now. So I think the hospitality business is not going anywhere. I think people like Marriott and Hyatt and Hilton are going to get only more dominant and stronger as the world reopens.
Those were great points by both Jim and Sam. Banks are already in a precarious position where they don't want to have to raise more capital to cover all these potential losses, and it's going to be a huge day of reckoning at some point for all the major lenders. Hotel and retail industries are going to have a tough time digging their way out of this one, and it's going to be very difficult for them to reset. To try to get occupancy back to the 75 to 80% it was before the pandemic is going to be impossible for a lot of the small hotels. As the government has kicked the can down the road when it comes to evictions, there's still a huge problem lurking out there. Most eviction moratoriums are expiring here at the end of the year, so we'll be faced with an incredible flood of evictions as we get into January of 2021. Please leave a comment down below on what you think is going to happen. If you like this video, please make sure to give it a thumbs up. It really helps out for the YouTube algorithm. Also, my next video is going to be about what's going on with evictions, when people are going to be displaced from their homes, and what's going to be the consequence. Make sure to subscribe and hit that bell notification so as soon as the next video is available, you'll be notified.